McLeod with the Investing News Network, and here today with me is Peter Schiff of Euro Pacific Capital. Thank you so much for joining me today.
Oh, my pleasure as always.
Okay. So we're here at BRIC. One of the topics you're discussing is, or have already discussed, is the Trump train wreck and how to profit from that.
That was my workshop, yeah.
Okay. So can you tell me briefly the cause of the train wreck? How did we get here?
Well, everybody's on the Trump train, right? Everybody thinks this is great, the economy is booming, the tax cuts are going to be powerful, and we're solving all the problems, and we're making America great again, and we're, deregulating, and we're unleashing all of these animal spirits, and that's the narrative, but none of that is true. And I don't think it's a train you want to be on, because I think it's headed for a wreck. I think that Trump inherited a bubble of epic proportion from Obama. In fact, Trump himself recognized the bubble. I mean, it's actually bigger than he thought when he said it was a big, fat, ugly bubble. But at least as a candidate, he talked about the bubble, and he talked about how all the statistics are phony, and it's not really showing the truth about what's happening to the economy. Well, now it's the same economy, but all of a sudden he loves the statistics because he's taking credit for how good everything is, and he's overpromised, and he's going to underdeliver like nobody's ever underdelivered, because we are headed for a crisis much worse than the one that we had in 2008. I think it'll make it look like a Sunday school picnic. I think it's not just going to be a financial crisis. We're not going to get off that easy. It's going to be a currency crisis, a dollar crisis, and the impact on the economy and on the standard of living of the average American is going to be much more profound. And Trump and the Republican Party, unfortunately, are going to get blamed for it, just like Obama, just like Bush was blamed. But it's beyond the presidents. It's more the Federal Reserve. It's the monetary policy. Yes, we have too much government, but it's all the cheap money that has made it all possible. And when this thing blows up, we're going to make such a hard turn to the left. It's not going to be Obama that's going to, it's going to be Bernie Sanders or somebody that maybe Bernie Sanders handpicks, his protege, but he's going to be a socialist, and he's probably going to have both houses of Congress, and it ain't going to be pretty.
Okay, so this train wreck, I imagine it's difficult to predict exactly when it will come to a head, but can you name some signs that you would say, okay, now we're getting close?
Well, the signs are there. Just a question of when they go from flashing yellow to bright red. But you've got the movement down in the dollar. Last year was the first year in 5 that the dollar fell, but it was the biggest drop in 14 years. It's off to a weaker start now. It's almost down every day. It's not a crisis yet, but it's on the way. Look at the bond market. We hit a new high today in the 10-year yield, the highest we've been, 3-4 years. But we're very close to getting through the 200-month moving average, which we haven't done since I can't even remember. We could be very close to a major breakdown in the bond market. The weak dollar is the driving factor. It's all the inflationary forces that have been unleashed over the years coming home to roost. So you've got rising commodity prices, rising oil prices, right? The budget deficits are going to rise. The trade deficits are hitting record highs. All of these things are the warning signs that people are ignoring, but they're going to start flashing brighter and brighter and brighter until they're blinding.
Okay, so as an investor, what do you do? What should you do right now?
Well, I've been preparing for this for a long time. People could say I prepared too early, and that's something that I always do. I always see these things from a mile away, and I prepare so early that people think I'm wrong. Some people actually give up, and unfortunately give up at the exact wrong time. They throw away the winning hand that I dealt them, right? They get bluffed out by the market. But people need to be in gold and gold stocks, but emerging markets, foreign stocks, real assets. Avoid the U.S. bond market, the dollar, overpriced stocks in the U.S., but there are other overpriced stocks around the world. But we are heading for a major economic upheaval, and there's going to be a gigantic realignment of wealth and purchasing power. There are going to be people who are going to lose a lot of purchasing power, right? And there are going to be people who are going to gain it. And I'm ready to gain it, right? And I think I'm positioning people to ride this wave. Most people are going to drown beneath the wave.
Okay, so you mentioned emerging markets and getting out of some U.S.-based assets. Can you go more specifically on what those might be?
Well, a dollar-denominated debt instrument would be a treasury bond, a corporate bond in dollars, municipal bonds, right? Also, a lot of U.S. stocks where they earn a lot of dollars selling products to over-leveraged, underemployed Americans who can't even afford what they're buying, and they have to borrow the money, and they can't afford to repay that. So you have to understand how the dynamic is going to change when the Americans finally stop shopping, when they can no longer live beyond their means, when they have to live within their means. And believe me, our means have been dramatically diminished over the decades. And they have to understand how a lot of people are all of a sudden going to be a lot wealthier. A lot of people in other parts of the world who have been doing all the hard work, who have been producing everything that Americans consume, who have been saving all the money that Americans borrow, all of a sudden it's like, the tortoise that wins the race. The hare dies of exhaustion. And so you have to understand how this global dynamic is going to change when the dollar is not the epicenter of the global financial system, and Americans actually have to work if they want to consume, right? And so there's going to be a big realignment. So I want to own assets in areas of the world that are going to be increasing in value relative to those that are decreasing. And I don't want to buy into the bubbles. I don't want to buy into the hype, right? And so there's a lot of assets that you can buy that are, undervalued relative to the ones that everybody else is buying that are overvalued.
Okay. I'm going to switch tactics a little bit here. You're also at VRIC talking about cryptocurrencies.
I will be.
You will be.
Yeah.
Okay, so can you tell me your position on cryptocurrencies, and do they compete with gold? What is the story?
Well, most of them aren't even really cryptocurrencies. Even Bitcoin, now a lot of people admit, well, it's not actually a currency because you can't use it. It's too expensive, it's too slow, it's too volatile. So now they've rebranded it as a digital asset, and they're saying it's like digital gold. The problem is it's nothing like gold, because gold is an actual element. It's an actual commodity that people desire. They've desired it for thousands of years. They were using it as a luxury good long before it became money. I mean, money was eventually invented to replace barter, but what money is a commodity that everybody will accept in exchange for other commodities, and then you can use it as a unit of account, as a store of value, of a medium of deferred payment. But unfortunately, Bitcoin is nothing. It's just, somebody can give it to somebody else, so you can own it, but if there's nobody who wants it, there's nothing that you could do with it. There's no actual use other than the fact that you can give it to somebody. But why would somebody accept it? Well, because he thinks he can give it to somebody else. Well, why would they accept it? Because they think that there's a greater fool out there who will pay more. So it's a classic bubble, probably the biggest bubble I've ever seen in my lifetime, and I've seen a few, because the Fed's central banks have been blowing them. And this is kind of a byproduct of the central banks. They didn't actually blow this bubble the way they blew the real estate bubble or the dot-com bubble. I mean, it's not fueled by credit, but it's fueled in part by the narrative that the Federal Reserve helped create, because the initial people who got in early, who have the opportunity to cash out and actually make a bunch of money off of other people's foolishness and greed, they actually got in as a, it was a backlash against QE, against central banking and central planning. A lot of libertarians, free market guys, and anarcho-capitalists kind of got in. But now, obviously the guys that got in early need to drum up buyers so they can get out. And now you just have everybody buying, high school kids, people are putting money in, they're taking out home loans, they're using their credit cards to buy into a little piece of a dream because they're being sold a bill of goods that, oh, you're going to become a millionaire. You're going to get rich. Just put a little bit of money, because look at how much money has already been raised. Here's some little kid that put, his grandmother gave him $100 and now he's a millionaire. You could be it too. All you have to do is buy the next cryptocurrency that gets created. So this is a gigantic bubble. Now, whether we've seen the highs, I don't know. I'd say it's at least a 50-50 shot that Bitcoin will never go back to 20,000 again. Now, maybe it will, but it's too early to say that the bubble is over. But I think if we keep trending down, and we have been trending down, if we can't get back up and make a new high, and if we crack below, let's say 5,000, 6,000, and then get back to 1,000 or 2,000, then it's done. And I know people are going to say, well, Bitcoin has had, corrections of 80 to 90% before. Yeah, when it was tiny, when it went from $30 to $2 and very few people were involved. But at this point in time, you get that kind of decline, it's over. And I would already say right now that if you took the total number of people who own, let's say, Bitcoin, I would say more of them own it at a loss than own it at a profit. I mean, the people that have profits have huge profits, but as far as numbers, their numbers are smaller because we had so many people, record numbers of people opening up accounts, right? They have more accounts now on Coinbase than Charles Schwab. They were being overwhelmed with people buying at 15,000, 16,000, 17,000, 18,000, right? All these people are down. And if we go back down to, 1,000, 2,000, right? Almost everybody is down except the people that got in at the very beginning. But that is going to be a big problem for the brand because when everybody was buying in at 15, 20,000, all the stories were of how much money people made. Oh, me too, I'm gonna get in on it. But once the market collapses and now people start hearing the horror stories about how much money people lost, well, now they're not gonna buy it anymore. Because that is the main appeal for most people that are buying at these high prices. It's the appeal of getting rich. They don't even understand what's going on. All they know is, oh, it's a new thing, and if I don't buy it, I'm going to be left out. It's that fear of missing out. And the narrative is like, it's going to go so high that you might as well just buy a little bit. Because if you don't buy it, you're broke, right? Because all the wealth is going to go to the people that own cryptocurrencies. So you better just put 1% of your net worth just in case. Right? And so that's some of the buying. But then, of course, the smart money is using that buying to get out, right? Because in the end, the only profits that are going to be made in cryptocurrencies are going to be by the people who sell. And in order to sell and get out, you need a buyer. So that's what it's all about now. It's generating buyers, finding buyers. Somebody who can hold the bag for the people who got in early, who want to cash out and actually make money. But there are a lot of people who have this idea, oh, hold forever, right? Never sell. That's what the people who want to sell want you to do. So they have less competition, right? They've created this situation where you've got people who refuse to sell. Well, at some point, you know, the holders are going to become folders, and that's when it's going to implode. Now, that might be when Bitcoin goes from 1,000 to 50 in one day, right? I don't think it's going to implode from these high levels because people still have hope. But at some point, they're going to give up hope, and they're going to take whatever they can get. And it's not going to be much because then there's nobody to buy.
Okay, last question.
Yeah.
Best tip for investors in 2018?
Open up an account with me, Europe Pacific Capital. You know, just I think our strategy, you know, after many years in hibernation, the last couple of years, we're killing it, and we're just getting started. This is the tip of the iceberg, right? This is the beginning. Last year, again, was the first year of the dollar decline. This is not just a decline. This is going to be the biggest bear market in the dollar's history. And the worst bear market we ever had was the 71 to like 79. That was after we went off the gold standard, and gold went from $35 an ounce to 800, and oil went from $3 to 30 bucks, and you know the dollar went from 4 Deutschmarks to 1.5, from 360 yen to about 150. Right? The Swiss franc actually went. You could buy a Swiss franc for 23 cents, then it went up to like 75 cents. This one could be worse than that one. And this time, I think the dollar loses its role as the reserve currency. I mean, it should have lost it back then, but I think now it's over for the dollar, and now the dollar is just going to be another currency, and that's going to be a game changer.
Okay, thank you so much for coming.
Sure.
Pleasure to have you.
Okay.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Peter Schiff.